Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be looking for trading opportunities in the USDJPY, which has been consolidating with a bearish bias. So looking at this possibility of its possible decline towards 109.5, we will search if there are any shorting opportunities in today's session or maybe in coming sessions next week. We have seen limited range-bound moves so far in the week in major currency pairs. If we look at the USDJPY, which is the instrument of choice for today's session, you will see that its range is even below 100 pips this week. We are likely to see it in the day trading close to 110. However, given its inability to hold above 110, even after breaking above this level multiple times in recent past, a case can be made for its eventual decline towards 109. In today's session of Market Movers, I will be pointing out some key formations which can help us optimize the trade entries in USDJPY as well as in another instrument which is considered important by most of the traders, and it is a favorite one at that, the Dow Jones Industrial Average. If we consider the data release calendar for the day, we don't really have any major release scheduled for the United States apart from the PPI numbers. There were releases related to employment generation in Canada, on which I will be shedding some light. Prior to that, let us consider the data which we got earlier in the day for major European economies. Germany's inflation was confirmed at 3.9%. This was the final print with no major revision causing no big moves in related financial instrument. At the same time, we received multiple data points for the United Kingdom. The GDP growth is slightly below expectations at 7.5% in terms of year on year for the month of July. The industrial production is growing strongly with 1.2% growth being seen in terms of month on month and 3.8% in terms of year on year in the month of July. In Canada, 90.2 thousand jobs were created for the month of August, which brought down the unemployment rate to 7.1% from 7.5% seen in the month of July. Wage growth is healthy while participation rate remains at 65.1%. Now let us shift gears and let us consider the technical outlook for USD/JPY and the Dow Jones Industrial Average. Let's start the session's technical segment with the USD/JPY's technical outlook. This is the daily time frame chart, and here we have the USD/JPY consolidating in a very limited range of around 100 pips for almost 2 weeks now. If we consider its sharp moves of starting closer to 111 and decline all the way close to 109. After that, from mid-August to now, mid-September, we have seen it trading closer to 110, and it will be interesting to see which way it breaks. A breakout is going to be crucial, and I think breakout on the lower side looks quite a possibility, but until that happens, we do have to be careful and not jump the gun. That is why I will be pointing out some key formations, and most of these are on the lower time frame, which we will have to keep in mind. If we consider the pivot point series, we have this single pivot point at around 109.8, and that is where we have seen the USD/JPY hold on. We look at this pivot point formation, and if we make use of the classical system, we will consider these move above the central pivot point as bullish, whereas any movement below it is considered bearish. And if we look at its current formation where it has been holding closer to this, it is mostly sideways with the range being around 109.6 to 7 on the lower side and 110.5 on the higher side. But for any bearish move, bearish breakout on the lower side, it will be important for it to give up on these central pivot point and a decisive break towards this immediate low, I think is going to be crucial, and there onwards we can consider its bearishness to gather strength, and in course of time the move towards 109 can be expected. So for us, this central pivot point is going to play a key role, and this is going to be a decisive marker in near term. As long as it is holding above it, we will have to be cautious, and that means we will have to trade cautiously, and only a significant breakout on the lower side is going to be providing us a necessary confirmation, and after that we can look for new trading opportunities. If we consider this regression curve, it is almost flat with slight bias on the upper side, but given the fact that now the price action is shifting gears and it is below this central line, the middle band, we will have to think twice before going long, unless and until there is a significant break and sustainable move beyond 110, I would keep my bias on the short sell side. But for shorting it, we have to look for a breakout on the lower side, and for that, we can take help of immediate price formation where we have this low established around 109.6. And if we see the day ending for the USDJPY with no significant move in either direction, then I think we can even rely on this convergence zone of these three SMAs. We have 50, 100, and 200 SMA converging closer to 110, and this is going to be the ceiling in near term. In today's session, we are not really seeing or even expecting any big move, and rather than that, I'm expecting the USD to end the day closer to this 110 level. But since it has consolidated in today's session below this central key range of around 110 with this convergence zone, we can rely on this, and it is likely to act as a major resistance. So unless and until we have any substantial up move, we can be fairly confident of decline in USDJPY. So we can take help of this formation, and I think a stop loss anywhere closer to 110.2 or thereabout should be good enough if we are going to short it closer to this convergence zone. But that should be done in Monday's session, not today. Or if you want to go short in today's session, for that we will have to wait for any key level to be breached, and for that we have to take help of these prior swing lows, and that is unlikely to happen. And given that formation, I would prefer to wait it out, and by the time we come back for trading on Monday, we will have a lot more clarity in this trade. Now let us consider what's happening in the Dow Jones Industrial Average. This is the daily time frame, and I think last week when I had considered the Dow Jones Industrial Average, I had talked about the possibility of Dow Jones Industrial Average declining towards 35,000 or even below it, and now here we are looking at its break below 35,000. In today's session, the bearishness is dominant. We have seen it gathering pace on the lower side, and it has given up 35,000 and now approaching 34,700. And I think for next couple of days the bias is likely to remain bearish, and we can even expect the break below this immediate swing low, which is there around 34,600. We had seen the Dow Jones consolidating below this prior swing high. This time around it didn't really go to form a new swing high or new all-time high for that case, and that opens up the window of possibility for a new swing low to be formed, and that is going to change the picture in medium term. We can then expect the Dow to change its direction, and bearish bias is going to be more prominent. So if we have to go for trade, I would prefer to remain on the short sale side, but for that we do have to keep in mind that it has now moved significantly from the day's high, and it is trading closer to the day's low. So today I think we will do well to sit on the sidelines if you haven't shorted the low already, and by the time we come back on Monday, we can then look for opportunities to go short below these first support zone, which is there around 34,800. And on the higher side, we can keep the stop loss closer to the day's high, and we have this central pivot point around 35,200. As long as the price action is below it, we can expect the bearishness to dominate in coming sessions also. The regression curve has also inclined on the lower side after this failure of the door to go on to form a new high above the prior high, and that is going to be an important factor for the door traders, and we can expect the move toward this immediate low. The low formed in the month of August is going to be a crucial marker now, and we can expect it to be broken in coming days, if in not today's session. And for near term, we can rely on the price formation. We can take help of these immediate swing highs and swing lows while looking to go for the appropriate level for entry points. We can rely on these high. I think stop loss anywhere above 35,100 is going to be good enough for the Monday session. If we don't really have any fresh move above the 35,100, we can take help of these as the stop loss while looking to short the door closer to 35,000 level. And on the lower side, as I said, the next target is going to be around 34,500, and that is going to get us excellent risk reward ratio also. So that's my take looking at the current price formation of the Dow Jones Industrial Average. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. You can check out the Dicoscopy Analytics page for further coverage of the market developments. And if you haven't started to trade, take a look on the JForex platform. It provides a low-cost trading environment. We are also available on the Facebook. Do join us there. Thank you all for joining in. Have a fabulous day and the weekend ahead. See you on Monday. Goodbye.